we've talked about in previous podcasts about having a thesis of how you're going to invest, and not only that, but writing it down. And I think we even mentioned this on some of our investing mistakes episode, where we even had a written plan, but didn't necessarily, the execution didn't follow. So, I started off this topic by saying, like, I'm trying to write down my bear market thesis and what my plan is, my shopping list, how I kind of foresee it going. And obviously thesis change, but I think it's important to like kick off how we view this. And I think most people, specifically in the Discord and most people listening, are kind of pondering this question of like, what's the plan of attack? Right. So, I mean, I don't know about you guys, but mostly I really don't look at the USD value a lot of the crypto portfolio. Like my goal, and I think your guys' goal is like, I want to acquire more coins. I want more Bitcoin. I want more Ethereum. I want more of the coins that I feel long-term about. And Steven's giving me like funny smirks. But in general, that's what it is.
Best not to look at Steven when you're going through your notes and ideas.
This is literally my journal.
Very, very off-putting.
I'm going through my diary.
I resonated with none of what you're saying.
Give me your eyes.
Thank you.
I will reassure these
points. All right, my diary is safe with you.
I had the exact same moment in like 2 episodes ago where I was really excited about this whole thing, and Steven was just like, this is
my 2017 self really resonated with what you were saying.
Yeah, maybe I'm a cycle behind.
We're gonna get there. Please continue, sir.
So I don't know. I think I think we're at the lows, if not very, very close to lows. Like I think macro economy lows, we're definitely not there yet. And there's a question in my mind if we front run that in the crypto market, front run the economy lows. I think the stock market, typically front runs the economy lows like 6 to 9 months or so. So, does macro bring bad news and bring lower lows? I don't know if that's true. Barring a dive into a depression, I don't think so. So I think we're at good lows. We've talked about in the past. I think I mentioned the Bankless podcast when we recorded a few weeks ago. I was looking for 200-week moving averages. It feels like a safe place. You may not, tick the bottom, but it feels like a safe place to play. And so starting to buy here. In terms of how things will go going forward, I don't think we're going to rip all-time highs for a while. Like maybe 2 to 3 years out. We could potentially wick down to like a 300-week moving average, which for Bitcoin would be, I think 16, 17K. For ETH, that would be like around 750K. But it's also highly possible we don't go there. So, and I think a lot of the liquidation risk is flushed out. I think some of you guys maybe disagree, but I think most of it is flushed out. So starting to buy, going to continue to do so over the next 6 months. I think over the next 6 months, lots of chop going to happen. Buying STETH right now, taking the discount that it's at, about 6 or 7%. Seems
we should definitely talk about it.
I think that narrowed. I think it narrowed down
5%,
4 or 5 now. 4.
It was down to 11 briefly.
Damn.
Yeah.
Wow.
Pretty crazy.
That would have been nice.
We should go into that.
Yeah. And anyway, I'm gonna definitely buy ETH proper to save a validator or two worth to as over the next 6 months. And I think like it's important as we talk about hitting the bottom. It's important to bring in the fact that like we're not going to rip higher all of a sudden, anytime soon. Just because you pick the bottom doesn't mean we could stay here for like 2 to 3, years. And I think for me, what I need to see happen to know that we're going to go into a bull market is to see what got us here reverse, which is we had the prospect of higher inflation, higher interest rates, and just in general, like the trust ripped out of the crypto market with Luna and Terra, Celsius, and everything else that's come along. And that will take time. Like, in general, I think that the stock market and I think the crypto market needs to see, inflation start to peak, interest rates start to peak. We need to see the Fed kind of turn around and loosen again, which might take a few years. And then specifically for the crypto market, trust to be restored. I think we had that violated, and that's going to take some time. So in all those, I think, it's going to take a few years before we have the beginnings of a bull market again.
I was hoping you wouldn't say that.
I think in 2 years, like around this time, in 2024, you could still be hovering around like 40, 50K Bitcoin. And it doesn't sound fun, but I think it's somewhat realistic. And, I think if we're lucky, a late 2024 beginnings of a bull run, it gives the Fed enough to tighten, to bring down inflation and also maybe turn around interest rates depending on how bad the economy turns. only buying ETH. I think right now, like my Bitcoin allocation is pretty much set. Do you have a shopping list of all kinds of fun stuff, like some all L1s for some higher beta? Definitely maybe some DeFi tokens that might come back around that time over the next year, and whatever is new and fancy at the time. NFTs, looking at punks and fidenzas on my personal shopping list, but I don't think I'm gonna be touching any of those. Definitely for not 6 months. It could be a while out before touching those. Just kind of holding down for BTC and ETH for now. So anyway, that's the current thesis. Obviously things can change, but that's how I'm kind of looking forward to it.
There's so many ways to take this conversation. Are we just going to round table what our strategy is and like individually go into it, or?
I think we should use this time how we would use this time anyway, which is like, what the fuck are you doing? How are you playing this? What are you thinking? What are you feeling? Which is exactly what everyone else is thinking and feeling.
So I'll start like this. When ETH was at 3,400 or whatever, when I exited, we were in this same spot talking with Hoffman, and I was saying like, no, I just think this is going to get so ugly. I exit, but then at that same moment, I was also playing through like the Nick Urbani scenario. Like, okay, so let me write down when I want to get back in, what my strategy is going to be. I said at 1,700, I was going to get back in and like get back in heavy. It went through 1,700, and now it's at 1,200. I started buying, but I still haven't bought back in really heavy. But I am thinking back to that time, thinking like, well, shit, I said I would. It doesn't look great, right? Like, we would all sit around this table say like macro doesn't look too compelling. So like buying at 1,200 ETH doesn't sound like I should shove in right now, but you know what? Like long term, I'm almost positive that this is going to be just a good time to buy. So
it's it feels like a safe place, not the like most optimal, right, but like a safe
and
place.
Like we're not going to bottom tick everything we're going to try to buy, and that's silly to even try, anyways.
But I think if you saw like sub 1,000, you'd really start shoving.
So to 2 points. One is Nick's point that he said like the markets do front run the economy, right? Like we saw all markets come down before we hit a recession. Like we're probably going to hit a recession. But Steven dropped some good stuff in the Discord today. He said like all of stock pullbacks have been on multiple compression. And that's true, right? We still have like consensus expectations of earnings being even higher this year and next, and that won't happen, right? Like we're pretty certain that won't happen. So like stocks will fall farther as earnings come in lower than expectations. So maybe there's still more room on the downside, but long term, like we will front run the economy in the markets as well on the upside. So maybe when we hit a recession, maybe markets still like come back higher.
Yeah.
Do you want me to go now?
You can go wherever you like, bro. Of course.
Are you warning of us a tidal wave right now? Like I feel like that's you're about to war.
I don't know. I feel like I always bring the bearish tsunami.
Well, you're a little different because like your portfolio is mostly crypto, right? I think that's like important for people to understand. Like your total investable assets are mostly crypto.
Yeah, my portfolio is crypto, real estate, and cash.
Right.
It's almost entirely cash right now. I mean, I have like some like real estate. You just like liquidate it. You buy it and you kind of ride it out. Right now, I really want to sell my house, but also,
what are you going to buy at 6.5% mortgage interest rates?
I would just rent and weather the storm. But I did really want to take my 1 year 130% like profits on my house really badly, but I got mentally committed to it because
such a degen trader. If you start trading,
I got a HELOC I can sell you. Yeah,
your primary residence.
Yeah.
I bought all this furniture. I put so much time into like making it.
You got a piano in here. There's a grand piano.
I need a place to put it.
You literally just moved in.
I did, but like I also just knew it was going to tank, and I still do think it's probably going to tank. I mean, that's just the reality of having like plus 6% like mortgage rates. It's kind of nutty. But yeah, the rest of my portfolio, like I kind of go back and forth between the cash and crypto trade. I like to do the barbell thing. I like to be like all in or all out. And I don't really believe in this sort of middle of the road diversification thing, which is, I think better if you're like an active trader. And if you're not, it's not a good strategy. You probably want to diversify. But if you like Stan Druckenmiller said on that last interview we listened to, he likes to just put on like a position and just watch that thing, and he'd be so all in on it that he has to watch it at all
I felt
time.
that. I felt that because like I have he called them like zombie investments, like basically where it's like less than 10% of your portfolio, 15% of your portfolio, you don't give it the attention it needs. But if it's 60%, 50%, you're sure gonna watch that like a hawk and become an expert.
Yeah, and like, look, if you follow, if you for some reason you're one of the 3 people who followed me on Twitter for the last year, you're probably like, why did this guy just go from like tweeting about spooky swap to be being like a macro LARP all of a sudden? Like, I don't talk about any weird altcoins or anything crypto, because to me it's like irrelevant. To me, the only trade that matters is like, when is macro going to bottom, and all the other stuff to me I don't care about. I want to know when to get into crypto. I want to know when to buy back in and kind of ride that wave back up. And I think that's dependent on macro. So all I do now is watch macro, you know? So I think what the Fed is doing right now is dumb. But what they are doing is trying to sort of suck liquidity out of the risk element of the market, right? I think they're sort of actually like pretending that they're tackling inflation, because I choose to believe that they're not dumb enough to think that they're actually fighting inflation in an intelligent way. I think what they're trying to do is deflate the stupid asset bubble so that later the government can like reinflate stuff, but inflate intelligent areas of the economy, like shovel money into productive areas. That's sort of my theory, right? So to me, like the most dumb risk-on area of everything has been like the long tail crypto trade, like outside of Bitcoin and ETH and all the dumb crap we bought, right? So I like to look at the sort of broader crypto market. Like, have you ever looked at like the total market cap, like 2, total market cap 3? Total market cap 2 is like all crypto except Bitcoin, and then total market cap 3 is all crypto except Bitcoin and ETH. So total market cap 3 to me is like a really interesting like chart to watch, because to me it represents all of the dumb crap about crypto, basically. Sure, there's some good stuff in there, but it's mostly to me a representation of the risk on trade, right? And when I look at that chart, if I am like the Fed, like I don't think the Fed's really looking at this chart, but like it's the essence of what they're trying to do. And if I look at this chart in a sort of dispassionate way, in a best case scenario, I see like negative 30%. And then in like a bad scenario, I still see like another negative 60%. And so I don't really want to buy ETH yet. I don't really want to buy Bitcoin yet. I would if I was like a longer term person, but like I like to be like very in or very out. And to me, like I just still think there's too much risk there. It's hard for me to see us just magically picking a bottom here, like we could if Jerome just decides that I'm good, I'm just gonna for some reason stop. But like I still see a lot more pain. I'm not focused on buying any alts. I'm not focused on buying any long tail alts. I'm still just like, where is the crypto bottom? And I do see still a lot of systemic risk with like the Celsius and the 3 Arrows Capital and all these other like kind of like large institutions within crypto that are insolvent, right? Mm-hmm. And maybe liquidating.
Were you guys surprised by the 3 Arrows Capital? Like,
obviously.
I was surprised, actually.
Super surprised, right?
I thought they were just counter trading us the whole time, and it seems like they were shilling their positions, but their positions were just bad.
And leveraged.
They went down with the ship. They were just long crypto.